Good morning, everyone. Welcome to today's class. In today's class, we shall be looking at application of information technology in taxation. It is obvious that in 2020, we all realize the importance of information technology. We all realize and appreciate the use of technology in our environment. There are a lot of happenings in 2020. We have the emergence of COVID-19 pandemic. We have the NSAS threat and the likes. So there is a national lockdown in the country, except for few states. Now, with all this, there is no doubt that without the use of information technology, almost 90% or 99% of businesses will be forced to shut down temporarily, if not permanently. Okay, but with the use of information technology, particularly for firms or companies into professional services, unlike the conventional practice, for instance, for firms of chartered accountants, practitioners, where in most cases, they have to visit their client office. They need to go to the field, perform or carry out their obligation, or exercise their duties. But in 2020, we experienced a diverse form of practice because, one, there was a lockdown in specific states, for instance, Lagos State, Ogun State, Kano, and some other states. Now, with that, if your business is located in Lagos, within the period of lockdown, it is very difficult for you to commute to office from your place of abode. It is very difficult for you to receive visitors, and you can not visit your clients as well. Okay. Now, how do we communicate to this? For every business to grow, for every business to prosper, communication is very important. Internal communication and external communication. Yes, some professionals adopt the social media techniques, while others take the advantage of in-house developed applications. Okay, so with that, we have a practical experience of how information technology has disrupted our business environment. If you happen to be an accountant, it therefore means that there will be no job in today's environment. Okay, so in this class, we shall be looking at, we take the purpose, we take a brief introduction. We shall discuss the overview of the technological impact on tax practice and administration. the current roles of tax administrators, the effects of technology on modern tax administration in Nigeria. Also, we are going to look at the FIRS tax programmes, solution relating to filing requirements and procedures. The FIRS tax programmes is the recent application, locally built software adopted by the FIRS for ease of tax administration. After that, we are going to look at this for tax practice and administration. We shall take the impact of new technologies for tax practice and administration. Taxes applicable to technology-based and technology as an effective tool for tax practitioners and administrators. We also be looked at. We are going to look into key reasons why tax administration technology. And lastly, we are going to look at challenges of technology on tax practice and administration. At the end of the class, we shall summarize all what we have done so far. That's chapter review, summary of the whole topic. Then lastly, we are going to give a work example assignment to prepare students for the coming exam. Okay, so at the end of this class, we have a view of computer applications amenable to task planning and administration. Through the use of Excel and web apps. We should have navigational skills in FIRS, electronic income or companies' income tax returns, automated VAT management and returns, and lastly, Excel software templates for computations of employees' tasks, and key features of integrated tax administration system, tax of Federal Inland Revenue Service, which include 1, electronic registration of a taxpayer with the FIRS and validation of tax identification number, TIN. You should know the procedure for online submission of tax returns, the electronic tax payment to FIRS, processing of electronic tax clearance certificates, and automated filing and collection system of value-added tax as it relates to branded shops, super shops, supermarkets, and restaurants. Now let's look at the introduction. Hello, are you there?
Yes, I'm here, sir. Just that the network is unstable. I'm switching between different. But don't worry, continue. I'm following you, sir.
But you can still view the class note slide.
Yes, introduction. That's what it says.
Okay. So, like I said earlier, roles of tax practitioners and administrators are unique, essential in every society. There is hardly any business that particularly practitioners that are trading in or what you trade in, irrespective of the nature of your business, one way or the other, you decide some chartered accountants or professional accountants, as well as tax practitioners. Okay, so there's no business outfit that does not deal with series of issues yearly arising from their transactions or locations. Most entities find it challenging in handling their tasks because they lack the knowledge, because they do not major in tax practices. Because, for instance, now, if you have studied accounting or accountancy, okay, yes, accountancy is just like an umbrella services or all type of professions that could fall beneath it, or that are classified as accountancy. We have auditing, may decide to be an auditor, tax practitioner, forensic accountants or accountants. We have risk advisory, we have management accountants, we have financial and the likes. So now, as the case may be, or sorry, let's narrow our focus back to taxation. You should ask why should there be a series of tax audits on a yearly basis, okay, or at least every 3 or 4, 5 years. It is necessary. It is necessary, and the reason being that in Nigeria, we are practicing self-assessment tax system. Hello, we are practicing self-assessment tax. And for this reason, if taxpayer has assessed themselves based on what they feel they should pay, after submitting their returns to the tax authority, the law demands that staff of the tax authority reviews the annual return submitted, and if to their satisfaction, the taxpayer has done the right thing, the taxpayer has paid the necessary tax, then let it go. But if in their position, if in their opinion, the taxpayer has aggressively managed its tax exposure, then they may call for additional documents asking the taxpayer to come and prove why this is this and why that is that. Okay, so now what scores, or for instance, ICAN was forced to review the syllabus after 6 months of implementing, after 1 year, let me put it 1 year or 2 years, implementing the 2019 syllabus. The reason for this is the introduction of the Finance Act, which is part of the fiscal policy of the nation. Also, the COVID-19, the emergence of COVID-19 in 2020 brought about business disruption as a result of adoption, embracing of information technology. Now, so following these recent advances all over, many organizations are moving fast to key into the opportunities therein to facilitate and resolve their regular business challenges. So therefore, this section discusses how tax practitioners and administrators can make use of available technology to enhance their work and make them in today's dynamic environment. Before now, what we used to have in ICAN is conference market. But now, your scripts are being marked electronically. Okay, so they are being marked electronically. So this is part of what of advanced information technology or technological advancements. Okay, now in overview, what is the technological or what are the technological impacts on tax practice and administration in Nigeria and overseas or throughout the world? Okay, so if we agree that advances in technology all over the world is making organizations, particularly the multinational companies, to key into the opportunities to facilitate and resolve their regular business challenges. Okay, so therefore, tax practice to key into the opportunities is to tap from these opportunities and to boost their revenue. Okay, so they should make themselves professionals that have, they should make themselves a professional that is vast in information technology and not just conventional professional. So tax practitioners are independent firms licensed to provide tax-related services to their clients, while tax administration refers to regulatory agencies or authorities with a mandate to assess, collect, and account for taxes on behalf of the government. Yes, it is imperative to distinguish between the two, the tax practitioners and the tax administration. And let's see how or what is the impact of technology on each of these two. Okay, so for tax practitioners, what is their role or what are their roles? Or let's put it this way: of what use is information technology to tax practitioners? Okay, so let's look at the various services that tax practitioners provide to their clients. Okay, so they provide independent services to their clients, and this include preparation of tax records, computation of end-of-year tax liabilities, that's your income tax returns, filing of tax returns, advisory to clients on tax matters, compliance with tax legislations, resolution of tax disputes, and management of tax audit and investigation. Yes, just take the listed services as what we could provide. I can tell you that it is not, this is not an exhaustive list, okay? So it depends. At times, circumstance, occasions call for the kind of service a professional could provide his or her clients. Okay, so but basically or generally, these are the types of services a tax practitioners provides their clients. Okay, so now for preparation of tax records, that is, a new client, you have to file, you have to register it with the tax authority, submit all necessary documents. You create a folder for that particular client as PC tax file. Okay, so all documents relating to tax or that may be useful for tax audit in the future may be filed in this tax file. The computation of end of year tax liabilities is basically your income tax liability, of which you can't compute taxes without the audited financial statement. Okay, because the audited financial statements must have an handshake with the income tax liabilities. For instance, the revenue reported on the financial statements must be the same with the revenue that will be reported on the surface or on the face of your income statement, except where we have income exempted from taxes. And if there is, you should be able to differentiate that on your tax computation. Okay, so filing of tax returns, yes, at the end of, for instance, now for companies with 31st December year end, the tax or the annual returns is due to be filed by 30th June of the year following. Okay, so now, having used the audited financial statement to prepare the income tax liability, the work doesn't stop there. Then you still need to what? You need to submit this to the tax authority. Okay, so that's the filing of tax returns, submission of the audited financial statement, the income tax liability, that is the tax computation, and the self-assessment form. Okay, so now that we have tax probers, the evidence of filing online, the evidence of online filing must also be attached, where the taxpayer has some tax to pay, evidence of payments, and the electronic receipt must as well be attached, as well. After that, the tax authority has the duty to review the annual returns submitted on behalf of company ABC. Upon submission, or at the end of the review exercise, so if the taxpayer is reviewing this record in their office, we call it DEX review. Okay, we call it DEX review. Now, at the completion of this review, if in the tax authority position, which is normal, or which we have seen to be a normal thing, is that they always disagree or they always have to make inquiry about certain line item in a financial statement. And these are revenue, expenses, or let me put it this way, revenue, cost of sales or direct cost, as the case may be, administrative expenses, operating expenses, if there is any, other income, and the likes. In most cases, the finance cost is of no interest to them, except if the company is a multinational company and they need to review the computation of earnings before interest, tax, depreciation, and amortization. However, note that the EBITDA is one of the amendments made by the Finance Act. So that may call for review for multinational, that may call for review on multinational companies' financial statements. Okay, so now, having done that, if company ABC is asked or if the tax authority sends their, if they send their report of desk review, okay, their observation to company ABC. Company ABC doesn't have the precise knowledge of tax. So he or she may therefore need to engage the service of a consultant known as tax practitioners to advise. The tax authority has made inquiry on the understatement of revenue. They have made inquiry on why the revenue of ABC is understated, having a difference of about 800 million. Yes, this may be true because they have access to all our database, okay? So they have access to ABC adequate and sufficient information, and as a result, this is unknown to them, okay? So the tax authority may be correct. Then ABC will have to seek the advice of a professional to help them manage this exposure, okay? So the tax practitioner will advise on compliance with all the necessary tax legislations because the cost of compliance is quite cheaper than the cost of non-compliance. Okay, so this exercise may further lead to field audits and the likes. The tax authority may disagree with the response from the taxpayer. Okay, so they may give a notice of refusal to amend. And if the taxpayer is aggressive of their response, he or she could proceed to the tax, he or she could appeal at the tax appeal tribunal. Okay, so that's how we would resolve tax disputes. But prior to that, the tax practitioner could also resolve this issue between the taxpayer and the tax authority. So in most cases, or in practice, tax practitioners act as an advocate or act as a third party between the taxpayer and the tax authority. Then taxpayer equally assist to manage tax audits and investigation. Now, let's take the elements of tax practice. Basically, there are 4 elements of tax practice as highlighted below. These elements could be enhanced by leveraging on new technologies. 1, we have tax compliance. Tax compliance. This involves, like I mentioned the other time, it involves gathering of relevant tax information. Gathering of relevant tax information, for instance, the tax law for VAT, company income tax. In fact, for a new taxpayer, you should register for your VAT 6 months from the date of incorporation. Within 6 months from the date of incorporation, you have to register for the purpose of income tax filing, for the purpose of filing, or for the purpose of annual returns filing, 18 months from the date of incorporation, or 6 months from the date of commencement, whichever is earlier. This is part of compliance. So failure to comply with this, there is a penalty for that. Okay. So we also have the evaluation and classification of this tax information. Okay. So we have filing of necessary tax returns as well as representing clients during tax audits investigation. So just like I mentioned, that tax practitioners act as a middleman between the taxpayer and the tax authority. So if they were engaged by the taxpayer, so they act as a representative of the taxpayer, which is known as their client. Now, after tax compliance, then we have tax planning and advisory. Tax practitioners also assist or involve in planning tax exposure of taxpayer. They advise on what transactions or what form of business has high risk of tax exposure, Okay, so it involves arranging client transactions to optimize, that is, usually minimize tax liability. This could be through tax avoidance, or I should say, in most cases, it is done through tax avoidance because tax evasion is illegal. Okay, so tax avoidance is what is taking advantages of the loopholes in the tax laws and using these to manage the business activities of a taxpayer in order to pay minimum tax or not to pay anything at all. Why tax evasion is running away from paying anything, no compliance at all. Okay, so now in doing this, for tax planning, we have open transactions and closed transactions. How do we manage these two types of transactions? For open transactions, it involves planning the timing and amounts for pending future transactions to reduce any associated tax implications. For instance, you are expecting 1 billion naira from your customer, and you know that if your customer should pay the whole 1 billion naira within a month, you are paying 7.5%. You are paying 7.5% of the 1 billion naira, which is 75 million naira. Okay, so and this seems to be too much for you to pay in a month. Okay, so you may agree or arrange the payment with your customer that, oh, sorry, this 1 billion, can you pay me in 10 months? Okay, so I don't mind you paying me this in 10 months. Okay, so if this is agreed on, you know that you are receiving 100 million per month. So instead of paying 75 million bulk VAT, you now spread the payments by paying 7.5 million monthly. Are we together? Then for the closed transactions, this relates to how to present and classify past transactions in the accounts to reduce the taxpayer's exposure. Now the transactions have occurred already. For instance, the MD of company ABC is a philanthropist and he likes dashing out money. Okay, and for this reason, 25% of the transactions are donations. They are gifts, they are donations. And you know the implication of this? It must not exceed 10% of the total profits for that particular year of assessment. And this, for the whole transactions, you have 25% as gift and donation already. So you need to manage this. Okay, so if you are reporting donation and gifts as an expenses, then you should be waiting for the hardback from the tax authority if you fail to do that yourself. Okay, So can you see one of the reasons why it is necessary for the tax authority to do their DEX review or field audits? Now, if you have failed to add it back during the tax computation, the tax authority will do that for you, and you'll be required to pay the additional tax liability together with interest and penalty. Okay, together with penalty and interest. Apart from that, it also presents, or it affects the public image of the company. So you have to manage this, you have to plan it before it gets to the tax authority. So it is of two ways. Is either you take it to your director's current account, you don't report it as expenses at all, or you report it as expenses and you add it back during the tax computation for you to ensure that what you are allowing as your donation and gift expenses does not exceed 10% of the company's total profits. So except if you can prove to us that one of the primary activities of the company is to give donations and gifts. So tax authority needs to what? To present and classify all of these transactions in their accounts to reduce the company's tax exposure. And for tax litigation, it involves settling disputes with tax authorities in a law court or tribunal, as I mentioned earlier. And for you to do this, you need to be versed in various extant tax laws. You need to be versed in a lot of the provisions of extant tax laws and regulations. Under the tax litigation services, we have appearing as an expert or technical witness in courts of law on behalf of clients and appealing on behalf of clients when necessary. Then we have tax research and intelligence, which involves identifying a tax problem. Okay, you identify a tax problem. For instance, the audited financial statement has been prepared, and you find out that the percentage of expenses to gross profit, the percentage of expenses to gross profit is ratio what? Is ratio 1.4. Is ratio 1.4. So you don't think that the tax authority will take this from you without requesting for rigorous explanation, without requesting for detailed explanation why your operating expenses is 4 times higher than your gross profits. Does that mean that you have aggressively planned your tax exposure in such a way that you are accumulating, or you want to be accumulating losses that the company's profits in the nearest future may not absorb? Okay, that is, the company's prospects in the next 4 years is to make a profit of 1 million naira. But in your year 1, you have incurred a loss that may not be recoverable in the next 10 years. Okay, so this call for further question. So you have to identify this. Tax practitioners assist to identify all this kind of problem. They assist in gathering the relevant evidence or information for tax purposes. Yes. At the conclusion of the DEX audit review or field audit review or tax investigation, the tax authority may request for such document. For instance, now, for company ABC that has 4 times of 4 times expenses of its gross profit, the tax authority may call for source document, that is supporting documents, source document to support to know whether all of these transactions are wholly, reasonably, exclusively, and necessarily. Okay. They equally assist in evaluating several scenarios relating to the challenge. Yes, they assist to evaluate several scenarios. Okay, for instance, now the tax authority may use bank statement approach. They may use their web portal, that's in most cases for VAT. Okay, they could also use your receivables debits approach. They could use the turnover approach. So whichever approach they use, the tax practitioner could assist in evaluating the reasonableness of this approach, comparing it with the companies or the taxpayer business activity. They could also assist in determining and outlining the solutions to the problems identified by the tax authority. Are we together? Okay. Hello, are we together?
Yes, sir, we are together, sir.
Okay. Now, let's look at the current roles of tax administrators. What are the current roles of tax administrators? Yes, we have discussed that of the tax practitioners. For tax administrators, we all know that they are public authorities and they are empowered to assess, collect, and account for taxes for a recognized jurisdiction. We have the federal government jurisdiction and we have the state government jurisdiction, as well as the local government jurisdiction. At the federal government level, we have the Federal Inland Revenue Service, and at the state level, we have the State Internal Revenue Service, and at the local government level, we have the local government revenue and revenue mobilization what was it called? Sorry for that. So they are the local government tax administrator. Okay. Now, what are their roles? So we have listed 7 roles here, but note that they were not limited to this. Okay, but for the purpose of examination, we have listed 7. 1, we have registration and education of taxpayers. While taking you guys through the roles of tax practitioners, I mentioned that they may be engaged to register the tax practitioner within 6 months of incorporation for VAT purpose and within 6 months of incorporation for annual returns purpose. Okay. Classified by taxpayers. They assess taxpayers, both individual and entities. Okay. They collect, maintain records, and account for taxes paid. They manage and process tax refunds applications. Yes, this is where taxpayers are paid in excess and there is need for refund. Though in practice, it is not an easy thing to achieve because it took a lot of time, commitment, and the likes. We equally have Current roles of tax administrators. We have the registration and education of taxpayers. The tax authority receives tax returns filed by taxpayers. They equally assess taxpayers, both individual and entities. Yes, entities are corporate organizations, and individuals are what? Are individuals whose transactions are liable to tax. So both tax jurisdiction, the state, federal, okay, and the local governments as well, as their way or as the list of taxes they can collect, okay, or have the list of taxes they administered. Are we together? So these tax jurisdictions collect, maintain records and accounts for taxes paid. They manage and process tax refunds applications. They conduct routine tax audits and investigations. They manage and enforce tax debt recovery and advise on the review of tax legislations and regulations. Okay, so now let's look at the effects of technology on modern tax administration in Nigeria. The effects of technology on modern tax administration in Nigeria. Hello.
Hi.
Okay. In 2006, the Federal Inland Revenue Service deployed the first tax portal website, the tax portal, which is known as web portal, and this was implemented to automate and streamline taxpayers' registration and other tax administration processes. Also in 2014, there was an integrated tax administration system known as SIGTAX. This was implemented, and though it appears its deployment was stalled. Not too long, we have the tax promise. We have the tax promise introduced by the FIRS, and this was adopted, though the deployment was done locally. And this system has the capacity to handle different aspects of tax administration, which include e-registration, e-assessment, e-payment, electronic filing, electronic tax calculator, electronic tax clearance certificates, e-reporting, e-tax audits. Now, E is a symbol for electronic, okay? So now let's start with e-registration, that is electronic registration. With the tax promise, after or having registered with the tax authority for annual returns filing purpose by submitting taxpayer application form and all other necessary documentation or documents required. Then for a taxpayer to make use of this tax promise, there is need for registration. So this tax promise is a robust and integrated tax management software, which makes it possible for accurate taxpayers' data to be captured by the tax authority. Each taxpayer enrolled is assigned a unique tax identification number, and it is now possible for taxpayers to do so or to do self-enrollment through a web application service. We equally have e-assessment. Yes, the tax promise was so designed that it's, for instance now, for the company's income tax, what you need to do is to what? Is to input the line items you have in your statement of financial position and your statement of profit or loss. Once that has been inputted, it automatically computes your capital allowances. It computes your tax liability. It computes your adjusted profits. It computes your company's income tax. It computes your educational tax or education tax. It also computes your minimum income tax. And for the companies, for the income tax payable, it's compare the higher, or it's compare the minimum income tax and the company income tax together and take the higher of the two as the income tax payable. So when taxpayer file returns electronically, it is possible for their tax liabilities to be computed and assessment notice generated automatically and sent to their email account. We have e-payments. Upon successful filing, we mentioned that an e-receipt or e-assessment, electronic assessment, will be generated for the purpose of payment. An electronic assessment will be used for payment. So this, in fact, the tax promise was so defined that you can pay on the portal through remittal. What you just need to do is to generate your remittal reference. Okay. You can use your POS since you have the code. You can use your internet banking. You can use your bank transfers. You can use your USSD. Okay. So this is one of the advantage of these tax promise. E-filing. Most integrated tax management solutions come along with a module that facilitates electronic filing. This enables taxpayers to file their returns from their offices without the stress of going to the tax office, which might be several kilometers away. For instance, the FIRS has been encouraging taxpayers to make use of the recently deployed tax promise solution to file their periodic tax returns, including VAT and CIT returns. The beauty part of this tax promise is that taxpayers could file their annual returns at their comfort zone, without stepping out of their office or their place of business. Okay, so it reduces the traffic in various tax offices all. Okay, and also it reduces the stress. It reduces the paperwork for the tax authority as well. Are we together? Okay, so we have a tax calculator. Yes, there are modern tools, okay, that have been developed and deployed on the FIRS website. So this tool, that is the e-tax calculator, will enable taxpayers and their consultants to compute the accurate amount of taxes to be paid. This function has been part of the FIRS website in the last few years. You can use this link to confirm the efficiency of the e-tax calculator. We have the electronic tax clearance certificate. Yes, unlike before, you have to fill the application for tax clearance certificates manually. You submit to the tax authority manually. They carry on the applicable processes manually, and you'll be asked to come and pick it up in the office. That was the conventional way of getting your tax clearance. But now, with the deployment of information technology. You can apply for your tax clearance certificate online. Necessary documents may be provided online, and you can download your tax clearance certificate online as well. We have e-reporting. Each tax authority requires various performance reports to be generated on a periodic basis. These reports can be generated within seconds at the click of a button. And finally, we have the e-tax audits. During the COVID-19 pandemic, all stakeholders realized the importance of information technology. Prior to the emergence of COVID-19, different tax jurisdictions are sent out their They have sent out their field audit exercise letter. Field audit exercise letter commencing on so dates. But it is unfortunate that this could not be achieved because of this of the COVID-19. Some states were forced to lock down their business activities. Okay, so therefore, you cannot visit taxpayer premises, and the taxpayer as well cannot visit the tax authority offices. Okay, so we have to fall back on auditing electronically. So the Finance Act of 2020 has introduced the e-tax audit. So with that, it is possible for the entire process of tax audit to be carried out without the tax auditors visiting the premises of the taxpayer and vice versa. For instance, all the pre and post audit meetings can be held using video conferencing tools and document exchange electronically through Mails. Yes, this is happening currently in practice. In my office, we have attended several pre and post audit meetings in respect of each of our clients or some of our clients. We have exchanged several mails, exchanged documents electronically through mail. Okay, so this is one of the advantage of or benefits of the modern technology, particularly as it affects tax. Any question?
No. Pretty straightforward.
Okay. Now, let's look at another subtopic: new technologies for tax practice and administration. New technologies for tax practice and administration. Two different future trends in tax that both rest on information technology are: one, the increased use of digital technology, and a radical shift, that is a total takeover. Okay, now sorry. Okay. Now, I said there are two future trends in tax, and these two rest on information technology. One is the increasing use of digital technology, and two, a radical shift, total takeover. There is no doubt that information technology recently is disrupting a lot of business activities. So failure to adopt this information technology at the early stage may force you out of business, may push you out of business. Okay, so tax professionals, we use increasingly sophisticated technologies to enhance their traditional ways of serving clients. This is already happening today across the globe. Yes, I can tell you that I have some clients allocated to me. Most of my documents or most of my requests are being attended to via mail. Most of my requests are being attended to via mail. One, it reduces my cost of service. And two, it reduces my time. Three, it reduces my strength, my stress, and it improves my efficiency on the job. Because you can just imagine if you are working in Lagos, you can just imagine the traffic jam here and there. Okay, so at times you may spend like 4 or 5 hours before getting to your client's office. Okay, so it depends on the location. But if you have sent your request via mail, within 30 minutes, if the information are readily available in the client's inbox or in the client's folder, within the twinkle of an eye, you get them. Okay, so that's one. The radical shift that is total takeover. Here, technology does not simply streamline and optimize that traditional approach. It actively displaces the work of traditional tax professionals. Like I mentioned earlier, that if you failed to go to learn new things or to learn new way of doing things, if you fail to adopt this information technology, then you must have been part of the conventional accountants or conventional professionals. Okay, because virtually almost all professionals must have digital skill for you to become relevant in today's world of work. Okay. Now, still on new technologies for tax practice and administration. Now, digital transformation inspired by unprecedented pace of technological advancement is disrupting nearly every industry. I've mentioned this, and taxation is no exemption. Yes, because government is a stakeholder, and don't forget that the tax authorities are acting on behalf of the government. So some of the new technologies disrupting the taxation industry include cloud computing technology, artificial intelligence and robotics, blockchain technology, data analytics technology, social media technology, mobile app technology. These six technologies are disrupting the taxation industry. They are what? They are without doubt, they are what? They are disrupting without doubt, they are disrupting the taxation industry. Now, for cloud computing technology, We all agree that many companies nowadays are embracing the use of accounting software. And most of these accounting software are hosted in the cloud. Some of them come along with modules for task management used for automated task computation, such as computation of staff payroll, value-added tasks, and the likes. We equally have tax returns preparation and filing. We have task planning and forecasting, and we have task payment. Therefore, the artificial intelligence and robotics, traditionally, taxpayers or tax practitioners put a lot of effort in collating, evaluating, classifying, analyzing financial data in order to serve their clients and taxpayers. That is, in order for them to manage, to enable them plan the tax exposure of their clients. So artificial intelligence and robotics make it easier for tax practitioners to simplify and accelerate various data-related tasks. Robotic process automation software has been demonstrated to be effective in handling routine and monotonous aspects of the task man's job. So in developed countries, the use of robots and artificial intelligence, another type of artificial intelligence, are of no doubt disrupting taxation industry. So for tax practitioners to remain in the industry, then they have to learn digital skills. We equally have blockchain technology. But before going to that, let me emphasize more on cloud computing technology and artificial intelligence and robotics. For cloud computing technology, we have cloud-based task management solutions. And this affords task practitioners the opportunity to work remotely from practically any device with internet connection and serve their clients from any location at any time. It further helps tax practitioners to facilitate collaborations among themselves and clients. Like I mentioned earlier, that I have some clients I'm working on their assignments that I don't have to leave my office or I don't have to visit their premise before accessing their documents. So what they need to do is just to share a link with me. So I have the necessary document or the required document loaded in a folder in that link. Okay, so that's that. So, and for artificial intelligence and robotics, artificial intelligence is capable of making tax practitioners and administrators more productive as its algorithms allow machines to take over time-consuming, repetitive, and redundant tasks. Rather than just crunching numbers, tax professionals will be able to spend more time delivering actionable insights on tax implications of past and future transactions of the company. It enables them give efficient and useful advice. It enables them manage their clients' tax exposure, having time to study various extant tax laws and legislation, having time to consult, to gather experience from experienced professionals, chat with professional colleagues in the industry on a particular problem or issues that they are coming that they are coming across for the first time. So machines can help reduce costs and errors by streamlining operations. For instance, The optical character recognition technology enables practicing firms to automate and accelerate manual entries by converting textual data to digital files using scanners and mobile device cameras. I do that, you do that as well. Okay, so you can scan with your phone, you can scan with your laptop, you can scan with your printer, you can transfer, you can scan to USB and the likes. So apart from automating the repetitive and mundane tasks of tax practitioners, artificial intelligence will enable tax practitioners focus on high-value functions, such as tax advisory services based on deeper insights of client data. Then for blockchain technology became popular globally through the advancement in digital currency transactions, such as Bitcoin. And many businesses now leverage on the blockchain technology to record their financial and non-financial transactions in an open, secured, and decentralized ledger. Recently, we have electronic Naira, which can also be classified as a product of blockchain technology. So where the tax consultants or the tax authorities are made part of the transaction flow and given access to the data chain, it makes it possible for all parties to see each transaction and determine the tax implication. So the blockchain can equally be used to facilitate tax payment to the government at highly reduced processing costs. So it enables smart contracts, protecting and transferring ownership of assets, verifying people's identities and credentials, and among others. So once this is widely adopted and challenges around industry regulation are overcome, it will benefit businesses by reducing costs, increasing traceability, and enhancing security. We have the data analytics technology. We all agree that data has become the new cash, as it's extremely crucial to make useful business financial decisions. It is extremely crucial to make useful business financial decisions. So in today's world, data is not just numbers and spreadsheets that accountants and tax practitioners have been familiar with for years. It also includes unstructured data that can be analyzed through automated solutions. Data analytic software can allow for real-time status monitoring of financial matters, including their tax implications. It is the fuel that powers other technology trends that are transforming finance and accounting. We all agree that without data, there will be no information, because data is a raw fact, is the raw material of information. So it is when a data is being processed, then it become an information. So in the financial realm, data produces valuable insights, drive results, and creates a better experience for clients. Since everything leaves a digital footprint, the unprecedented digitalization of our world is creating opportunities to glean new insights from data that was not possible before. Then we have social media technology. We are all in this. We have social media technology. You can send documents to me through WhatsApp. Now, in our class, we have a class platform, which is, we are making use of WhatsApp. We exchange documents. Our class notes is being shared through WhatsApp. You access it, you download, you submit assignment via WhatsApp as well. So social media platforms have been with us for a while, and they have become useful tools in the hands of tax practitioners and administrators. tax practitioners may organize or may have a group or a platform where both staff of their clients and the assigned staff of the firm come together, rub minds. The staff of the clients ask questions, seek clarification on how to go about a particular transaction. So primarily, the social media platforms are used for dissemination of tax information due to its wide reach and appeal to the younger generation. Yes, the representative of the tax firm in this platform may share circulars, any changes in the tax law, may decide to discuss some particular provision of the tax law with them so that they have better understanding on the adoption or the use of this, or on how to adopt this law. Okay, so beside information sharing, platforms such as Facebook, Instagram, Twitter, LinkedIn, WhatsApp, Telegram are useful for collaboration among tax professionals and institutions. A lot of tax practitioners have made themselves more visible and attractive to clients through the use of social media platforms. And finally, we have the mobile app technology. Okay, so you can download the Tax Promas app on your phone, on your laptop. You can bookmark it. The electronic tax client certificate application app, you can download that. So tax practitioners can use their mobile devices to access the financial data of their clients anytime and anywhere, especially where the client has adopted cloud accounting technology. Also, tax administrators and practitioners could develop and deploy mobile apps which taxpayers and clients respectively could download and install for tax updates and news. Now, let's look at the impact of new technologies for tax practice and administration. The impact of new technologies for tax practice and administration. Are we together?
Yes, sir.
Hello. Okay. Now, the use of some of these technologies in tax practice and administration brings the following benefits. The use of some of these technologies brings about the following benefits. One, we have customer satisfaction. We have lower cost of compliance, focus on more valuable activities, that is, improve efficiency. We have data error minimization. We have improved voluntary compliance. Now, this is for the tax administration, be it the FIRS or the state internal revenue service or the local tax administrators. Who are the customer? That's the taxpayer. Okay, so with the introduction of the tax promas, the taxpayer has a sigh of relief. You know, there is, you can access the portal on your bed, while on your cushion chair, anywhere, whether you're on your ride, in as much that you have access to internet. So it has improved it has improved the value of the tax authority. And for them as well, it comes with what? With low cost of compliance. it comes with low cost of compliance. So, for instance, now, if it happens, your clients could not provide you some necessary information not until 30th of June. And you are aware that the due date for filing is 30th June. Okay, so due to the fact that you have clients eccentric, you are able to complete this job, but it was already 6 p.m. and you know the tax authority closed by 5. Okay, so definitely, if this happened when we still file the returns manually, then there is a liability for you already. Failure to file as at the due date, which is 25,000 naira. Okay, but with tax promise, okay, yes, the tax authority staff has closed by 5 p.m. but the tax promise is still open till 11:59 p.m. meaning that you can still file online within this time. Okay, but once it is 12:00 or 12:01, then the penalty for failure to file as at when due will start accruing. Okay, so that's that for the tax authority. And for tax professionals or tax practicing firms, it saves that time, the time of commuting from the office to the tax authority offices. It saves cost of transportation, stress, and the likes in the long run, and it helps them focus on higher level jobs that machines cannot handle. The mobility of service and increased capacity to serve multiple clients. You can file for taxpayers, for instance, if your firm is based in Lagos, you have a client which file is in Oningongo Tax Authority. You have a client which file is in Ikoyi Tax Office. You have a client whose file is in Victoria Island Office. You have a client whose tax file is in Alimosho Office. You have a client whose tax file is in what? Is in Amuwo-Odofin Office. Just imagine someone going here and there, having to be in Amuwo-Odofin Office, Ikoyi Office, VI, Alimosho, Onigongo at the same time. On the last day of filing, you know how hectic Lagos traffic is. Okay, so it saves time, costs, it helps them focus on higher level jobs, mobility of service, and it increases capacity to serve multiple clients. Because with this tax promise, you can file for each of your clients within a short period of time, okay, less than 1 hour if your internet is strong. Okay, so that's that. So let's take taxes applicable to technology-based transactions. Taxes applicable to technology-based transactions. E-business and e-commerce have become the order of the day across the globe, as most economic transactions are today executed online, real time. Some good examples of e-commerce transactions are online shopping, online movies, internet banking, online ticketing and reservation, auction sites, journal subscription, and online betting and gaming. One wonders if the players in the digital space such as Google, Apple, Microsoft, Facebook, Jumia, Konga, eBook, and the likes pay the right amount of taxes to the various jurisdictions where their services are consumed. Do they have physical presence in all the countries where their services are taken? The answer is no. Okay. Does Google have physical presence in Nigeria? Have you ever seen or cited where Apple office is located in Nigeria? Microsoft, maybe partially. Facebook, do you have any physical office? No. Okay, but these are platforms. These are platforms people use to transact. Okay, billions of nairas are being transacted online on a daily basis. Okay, so generally, income generated from technology-based transactions are not exempted from income taxes. But the difficulty here is that how do we tax our digital transactions? So most of the traditional tax types, such as VAT, withholding tax, CIT, and PIT, are equally applicable to technology-based transactions, such as e-commerce transactions. Though some multinational companies now prepare their financial statements that clearly show transactions from digital business as a separate line. However, due to the problem of no physical presence of most of the digital companies, many countries appear to introduce special taxes based on the concept of significant economic presence, in line with Organization for Economic Cooperation and Development Framework. As at October 14, 2020, Austria, France, Hungary, Italy, Poland, Spain, Turkey, and the United Kingdom had implemented a digital service tax. Belgium, Czech Republic, and Slovakia have published proposals to enact a digital service tax, and Latvia, Norway, and Slovenia have shown intentions to implement same. The UK digital service tax is charged at 2% on gross UK generated revenues of large businesses providing a social media service, search engine, or online marketplace to UK-based users. So the tax was applied to revenues generated from 1st April 2020. France equally has the same thing, but theirs is 3%, okay, on digital revenue for large tech companies. So in effect, singling out the US tech giants, but as said, it would withdraw the tax in favor of an international solution being negotiated under the auspices of the OECD. In late February 2021, the US removed the stumbling block to global deal on digital tax as the Joe Biden's administration dropped the insistence on safe harbor for companies adopted during the Donald Trump's administration, opening doors to agreements with other countries. The Organization for Economic Cooperation and Development has predicted that an acceptable international agreement on digital service tax is likely to be reached by mid-2021. Here in Nigeria, the Finance Act of 2019 introduced the significant economic presence, and this came into force on February 3rd, 2020. Nigeria established a new legal framework that would allow her to levy tax on the income of non-resident technology companies whose business activities constitute significant economic presence in Nigeria, to the extent that these companies do not already have a separate local entity incorporated. If they have a separate local entity incorporated, then this provision may not be applicable. So electronic transactions were made subject to stamp duties. On May 29, 2020, the federal government of Nigeria published the Companies Income Tax Significant Economic Presence Order 2020. And the order in its official Gazette number 21, volume 107 of February 10, 2020, provides that a non-resident company shall have a significant economic presence in Nigeria in any accounting year. Where it derives 25 million or more as annual gross turnover or its equivalent in other currencies from any or combination of some specific activities. So that's the number one criteria. The second subcategory includes that one, the use of a Nigerian domain name, registration of a website in Nigeria, and have a purposeful and sustained interaction with persons in Nigeria by customizing their digital platforms to target persons in Nigeria localization tests. So these three conditions must be in place. An example of the latter is where the company reflects the prices of its products in Naira or provides options for billing and payment in Naira. Some countries have equally put in place policies for the regulation of cryptocurrencies and make such transactions taxable. The recent ban placed on Twitter in Nigeria has again raised question on whether or not these technology giants operating in the digital space are paying any tax to Nigeria. Now let's look at the technology as an effective tool for tax practitioners and administrators. We have discussed these in our previous subtopics, but we are going to take these in another dimension. Okay, so according to MC Kinsey, by 2030, intelligent agents and robots could replace as much as 30% of the world's current human labor, causing 375 million people to switch job categories. They have no choice, but there are always ways out for every problem. Now, the question therefore is, should robots be required to pay tax, considering the fact that many robots are being deployed to take over the repetitive tasks of accountants? Yes, they are artificial intelligence. Okay, so they could be taken as an asset because the company has their control. Okay, so if the company has total control of these robots, then it becomes an asset. Not only that, they may be seen as what they may be seen as they may be seen as what was it called? Intangible assets. Okay, they may be seen or categorized as intangible assets. So now let's move further. Technologies and their impact on tasks. For cloud technology, this could impact in the following ways. One, task management software hosted in the cloud. Check out cloud service providers. Storage and retrieval of task transaction data in the cloud. Access and analyze task data anytime, anywhere, and on any device. Yes, you can, unlike what we used to have before now, that you have a shelf where you categorize or classify your files, your records, and the likes. So this could be done on the cloud. So it presents results in robust dashboard and collaboration and exchange of information between tax authorities and taxpayers. Then we have data analytics technology, and this impacts business in the following way. One, through the use of statistical power of modern machines to analyze volumes of data and gain better business insights, identify and predict tax risk factors and anomalies, and improve business and tax advisory services due to deeper insights. This equally offers accountants and tax auditors some advantages, such as they will be able to share transactions at source. They will be able to review complete sets of data 100%, that is 100% check. Yes, they will be able to predict analytics, that is assist in risk assessment and evaluation of programs, task controls. And for artificial intelligence and robotics, yes, AI is already in use for optical character recognition and voice recognition and can easily be adapted in other areas of tax compliance. We have artificial enabled application, that is chatbots. If you log into the LIRS portal, that is the Lagos State Internal Revenue Service, you have a chatbot there. So this has been designed. Once you log into the portal, a message will pop up asking for your detail, your name, and your request. So the chatbots can deal with more complex tasks, such as answering subtle taxation queries. This technology offers the following, among others: zero data entry, responding to queries. The machine can be made to learn from tax auditors' conclusion and uses it on future scenarios and identify patterns in both structured and unstructured transactions which ones are normal and abnormal. Then we have our social media technology. We all agree that it's a medium to build relationship which can easily be used by tax practitioners. One, to gain visibility and exposure. Two, be recognized as experts, build their online network, and keep the client informed and provide better and prompt customer service. Then for our mobile app technology, yes, they are useful in the following ways. One, mobile accounting provides tax practitioners many benefits, such as on-demand data and information, even if they are on the go. And starting a laptop or computer every time you want to work and then go online is a waste of time when you can get all the information with just a single tap. Okay. So then finally, we have the blockchain technology. For the blockchain technology, a distributed ledger provides by blockchain technology serves tax practitioners as follows. One, decentralization and distribution of shared database. All parties to a business transaction are involved in recording and validation from inception. This includes involving the tax authorities, no reconciliation needed, and no tax audit required. So by storing blocks of information that are identical across its network, the blockchain, one, cannot be controlled by any single entity, decentralized to all nodes, offers no single point of failure, provides enhanced security through its immutable ledger, provides enhanced transparency of transactions, and is faster and cost effective. Now, let's look at the reasons, key reasons why practice firms leverage technology. Key reasons why practicing firms should leverage on technology. One, if you want to win more clients, okay, so there's no doubt that majority of clients nowadays would prefer to hire tax practicing firms that are adaptive to technological changes. Okay, they want to engage a tax professional that is vast in the use of technological tools. Your know-how, your technological know-how will equally assist you to retain more clients because the ability to help them manage their system will assist you on the job. So adoption and adaptation of modern technologies would make practicing firms to render the much needed valuable and improved services which make clients retain them. They will have cross-selling services. Technology provides platforms to enable practicing firms make their services more visible to many clients. And lastly, we have adding greater value. How do you add value to your clients? Firms that adopt new technologies are able to automate most of the routine and labor-intensive tasks because the adoption of technology reduces time spent on job, okay? It reduces costs and likes. So your ability to deliver timely is part of adding value to your client's business. So another thing is that because you have saved your time, you have saved your cost, you'll be able to do other valuable things. You'll be able to what? You'll be able to have a wider knowledge. You'll be able to have you'll be able to acquire, or you have time to acquire other skills that could be of an advantage to the firm, and as a result, or in return, you add value to your clients' business. So this makes it possible for such firms to focus their attention on tasks that generate greater values for their clients. Are we together?
Yes, sir.
Okay. Then we have challenges of technology to tax practice and administration. Yes, we have been discussing the benefits, the advantage, the good side of it. So what are the likely challenges? Because we all agree that this technology is going, or is disrupting our business environment. And if care is not taken, it may render you unemployed. So to avoid these threats, to avoid these risks, then you have to do something. Okay, so before looking at the opportunity, let's take the challenges. Now, the challenges of technology adoption in tax practice and administration include: one, low computer literacy level. If you are not versed in the use of computer, for instance, now look at our classes. We are holding our classes online. So we have saved you the cost and time. The time you spend on transit, the stress, the cost of transportation has been saved. Okay, so what you just do is to subscribe on your internet. So without your computer knowledge, this may be very difficult. We are using PowerPoint presentation. We are using Zoom and the like. So without you having this knowledge, it may be very impossible. For instance, now, adding being we have course to practice some things. We make use of Excel too. Okay, so you can just imagine, without the knowledge or the use of all these tools, how will it be possible for us to have this class online today? Okay, so another thing is poor internet facility. We are experiencing that in our classes. Is that true? Yes. Of course, in our environment, we have this is like an exogenous factor to us. It is outside our control. There's nothing we can do. Okay, so it depends on the environment or the location you find yourself as at the time you want to receive or deliver the lecture, or you want to make use of all these internet gadgets. So possible cyber threats, yes, this is a great risk for us. In fact, if you go to Abuja, the tax authority, if you go to their tax authority there, that is the FCT IRS, they won't allow you to take your laptop into their building. The last place you can take it to is the security shop cubicle. Okay, so that's the only place you can use it, and even that, it depends on your relationship with the security. Otherwise, you will be asked to drop your laptop in a safe outside. The reason why we have this is because that some guys in the past has used this to log into their server, crop out some information which are used at the disadvantage of taxpayer and the tax authority. Okay, so this is a great threat. We have high implementation costs. Yes, that is true. Okay, there is high implementation cost. So we have a client, one of the tax authority, okay, one of the tax authority jurisdiction. So we are currently implementing a particular software. Okay, so you can just imagine the cost of this software. So, but on the long run, the benefits we outweigh the cost of implementation. So we have lack of technical know-how. Yes, I've mentioned it earlier. So without your technicality, without your technical know-how, you may find it difficult to navigate your internet, to navigate your client's system. For instance, if they are using accounting software which is linked on the cloud, okay? So you may find it difficult to access their file. So it requires a technical know-how. So we also have challenge of data validation, that is garbage in, garbage out. Garbage in, garbage out. So now let's take the opportunities. Now, the opportunities for adopting technology for tax practitioner and administrator. One, it allows tax professionals to focus on higher level jobs while offering their services to clients, enhancing visibility to clients, providing ability to offer personalized service to clients, enhancing adaptability to change and offering new services, saving time, become more efficient and focused on relevant data, saving costs, enabling mobility of service, providing new skills to tax professionals, enabling opportunity to work collaboratively with anyone from any part of the world, and increasing tax audit quality as it begins to allow auditors to ask a lot more questions. To ask a lot of more questions. Any questions?
No, for now. It's quite it is straightforward though, but one needs to read up the text over and over. I thought you said you were going there would be a few examples, sir.
Few examples.
I thought they were going to take examples at the end of the class or something, if there are any or something.
Okay, so let me share. I will share my screen. If I've mentioned that, but I doubt if I mentioned that, but I only said we will summarize whatever we have discussed so far and we give assignments. But that's not a problem. Let me show you the task promise portal. Okay. Hello.
I'm with you, sir.
Are you good with that?
Yes, sir.
Okay. A minute. A minute, please. Hello. Hello. Hello.
I'm with you, sir. I'm with you, sir.
Okay. Sorry, I don't know why my browser is not responding. Okay. My browser is not responding, but let me give you the link.
Okay.
Let me give you the link. So go to check your charts. Let me type it there. Have you seen it?
I've seen it, sir.
Okay. It seems the internet is fluctuating. My browser is not responding. I would have loved to show you how the platform looks like, but you can use the link I shared with you.
Okay, sir.
Okay.
Okay.
So in today's class, can you still view my screen?
Yeah.
Okay. In today's class, we have discussed the use of information technology by the tax practitioner as well. Okay. It seems is now showing.
I can see that.
Okay, you can see it.
Yes, sir.
Okay.
It welcomes to Tax Pro Max.
Okay. So if you have your details, that is your login details, you click on login. And if you are a first-time user, you click on register. Okay. So we won't be able to use the login. In fact, we won't be able to use either of the option because they are confidential information. Okay. So the login details are existing taxpayers' login details. Okay. Why? For you to register, you need your SIM, we need your RC number, you have to fill in the taxpayer update form. Okay. So once you do that, an email will be sent to you where you have your user ID and your login details. Okay. So,
Okay, sir.
So can you see? So because I clicked login, it's asking for my email address, that is the registered email address and the password.
Yes, sir.
Okay. So hello.
Hi, sir. I can see it, sir. I can see it.
Okay. So in today's class, we have discussed the overview of computer applications amenable to tax planning and administration. Yes, we discussed the FIRS web portals and the use of other tools such as Excel, PowerPoint for delivering of services. Navigational skills in FIRS and other tax portals were discussed. The electronic income, filing of annual returns, assessments, and the likes were discussed. The automated VAT management and returns, Excel payroll, software templates for computations of employees, tax, and key features of integrated tax administration systems, ITAS, of Federal Inland Revenue Service were all discussed. Are we together?
Yes, sir.
Okay, so we have come to the end of today's class.
Yes, sir.
I will urge you guys to, do you have the new study test with you?
Yes, I have it in my system. I have it in my system.
Okay, so please, I noticed that I observe that ICAN has included the Finance Act of 2020. Okay,
Okay.
so for the topics we have put so far,
Yes, sir.
I've always been discussing the implication of the Finance Act of 2022, though
Yes, sir.
My focus was just on the Finance Act of 2019. Okay, but
Yes, sir.
now that we have the Finance Act of 2020 embedded in the syllabus, so what you just need to do is for companies income tax, okay, it only affects the minimum income tax. It will only affect the minimum income tax because it was the Finance Act of 2020 that reviewed the 5% provision made in the Finance Act of 2019 to 0.25. Recall that we discussed that extensively in the class, that it's just for companies, it's just for 2020 year of assessment and 2021 year of assessment, that is from 1st January 2020 to 31st December 2021 year of assessment. And I could remember that you asked a question pertaining that in the class.
Yes, sir.
Okay, so for companies income tax, that's my concern. That's my area of concern. So in our coming class, we are going to discuss taxation of specialized business. Taxation of specialized business. Okay. So and in our next, the next two class, I have an intention to discuss the personal income tax with you, as it affects the Finance Act of 2019 and Finance Act of 2020. Okay, so, but I have to discuss this first because it's an emerging trend.
Okay.
Okay, it's an emerging trend, and don't forget that it is part of ICAN focus. So I pray that God make today's class a beneficial one for all.
Amen. Amen.
So thank you for coming to class. Your assignment will be shared on the class platform.
Okay, sir. Okay, sir.
Okay, so thank you very much. Do have a wonderful week ahead.
And you too, sir.
Yeah.
Okay.